Good morning, everyone. Good afternoon, everyone, and good evening, everyone, depending on the part of the world you're watching this from. This is Bearable King once again, and I want to do a long-term review of the Euro US dollar. All right, this is another Sunday, and I love doing my analysis on Sunday so that I prepare for the week ahead. Now, if you look at the chart in front of you, we have the Euro US dollar as far back as 1972 till date. And from the chart here, we can see that the market was bullish here. It was the first push. Then it had an almost equal low, then gave this higher high. And then the market pushed from this point up here. So we've had a three-way movement, if you ask me. Now we have what seemingly looks like a correction. And if you notice, the price pulled back to a key area point. So from 2002 to 2008, which was the highest point. If you notice properly, you can see that the price pulled down to the 79 fib level before giving us a nice rejection. All right. Okay, but that's not important. The reason why we're looking at this chart is because this is the monthly chart. We want to know what the market may be doing from here. Right now, we have a bounce around this key point, and this area is a key interest area because of a few points. For example, the price rejected this place in February 2001. Then it bounced off this place in 89. Then if you can see in 78, there was a rejection. So that's a key area point. Along with this area of interest, we also have other areas of interest that are marked on the monthly time frame. So right now, what we're looking at is an upward move and a possible pullback. So it's possible that this market may continue going up, okay? On the monthly time frame. On the monthly time frame, it's possible that the market may continue going up. At the same time, if we consider a trend, say from here to here, because whenever it's an uptrend, your interest is the support area or the area of support, we can see that the price has broken this trend line support. So it is also possible that our euro may move this way, come to this point, test it once, then continue falling. All right. But before this happens, we'll follow the day or the week as it unfolds. But for now, on the highest time frame, which is the monthly, we can see that the market is in between. So for me, whenever I look at the monthly time frame, what I'm looking for is what has the market done at the last key area. All right. And if I have this point as my last key areas, what has the market done? The market came all the way from this top down here throughout the whole of last year. And from October last year, the market rejected, bounced off this key area zone and started moving up. Now, the last three candles, this is the current month of May, but for March, we can see that March and February gave us a breakout from this point. So personally, I would be expecting that this market would move up to this area, okay? Then from here, I'd like to see what the market will do next, okay? The reason why I'm not considering this engulfing bearish candlestick is because it is the current candlestick for the month of May. I wouldn't be focusing on it because the month is still ongoing. The only time you consider candlesticks are after they have closed. And this month has not yet closed. So my focus is really on 1, 2, 3, 4. This blue candle, which was for April. So what we had there was we had the price push up 1, 2, 3, 4. Then we had a pullback. Then after the pullback, we now had a bullish continuation. All right, if you notice, this one gave us a higher than this. Okay, so because of that, I'm expecting that it is possible that this market may do this, then push up into this area of interest. Okay. All right, so I'm going to move quickly to the weekly time frame. The reason why the weekly time frame is good is so that you know what to expect from the market. Okay. And from the weekly time frame, what we can see here is the market gave a nice rejection up here. Okay. So because this market gave a nice rejection here, this would be the next area of interest for me. Okay. So what do I mean? All right. So the market moved up from this key point, moved up to this point. All right. We tested this area. Now came up to this point. And if you look at the candlestick, well, when the market was pulling up, you could see that the momentum had already ended. And after that, we had an engulfing bearish candlestick last week, and the last 2 weeks. And this for me is an indication that the price may come down to this point. And from here, we may see a pullback up. So maybe here. Then from here, we'll now know if it's going to pull back or continue going higher. But for now, if I was asked, oh, bear bull king, what are you expecting from the market? I would say I'm expecting a sideways correction on the weekly time frame. As you can see, this is the setup that we have going. For this one to be invalid, we need the price to break below this point. Then we can say, okay, we expect a pullback, then a drop down to this point. But for now, what we have is we're expecting this price to come down to as low as 1.0515, which is roughly about 300 pips from where the market is at the moment. So this is what I'm expecting on a weekly time frame, not yet confirmed. And the reason why I'm saying it's not yet confirmed yet is because this price can break below, meaning that the price can actually do something like this. Break below. If it does this, it could pull back like this. Then what happens? The market comes down here. This is also a possibility, but because we have a bullish push, we have a sideways correction that is ongoing. I'm expecting the market to bounce off this area to continue going up. Okay, so it will give us like a double bottom for the continuation to the upper side. Okay, not a breakout like this. We may have a fake here around here, but time is going to tell us what to expect from the market there. Okay, so let me just make this fixed on the current time frame while I move to the lower time frame. Now, on the lower time frame, yes. Now, the reason why I use key areas on the monthly time frame is because if the market, let me explain this for everyone to understand. Okay, let me zoom out a bit. Okay, let me use the upper part of it. All right, so the reason why I use the monthly time frame for my analysis is this. Let's say the market comes down. Let's say the market is coming from here and the market moves. And the market gets to this point and rejects this point. This is the reason why I have monthly key zones. And the market rejects this point and the market is coming down. 95% of the time, the market would come down to this point. It may take a while, but eventually it's going to come down to this point. Now, once it gets to this point, whether the market will bounce up or come down, the candlestick is going to tell us. So say the market comes up like this, then the market comes down like this. and the market pulls back to this point, and we can see a nice rejection. What am I expecting? Once we see a rejection here, it means that this previous support level here has now turned to resistance here, which means that the market is going to do what? Fall down to where? This will be the next area of interest. If the market gets here, bounces off it, comes here, does something like this, a double bottom, and we see a nice confirmation, and I take a buy, my take profits will be looking at first this point, then next this area. Now, if it gets to this point and it breaks above it like this, then the market starts coming back. What do I expect? I expect it to react around this point. And if I see a nice rejection here, what do I expect? I expect to buy. If I buy, I could buy, say the market does this. I know that there's a high probability that the market will come here. Now, people would ask, why are you so sure that the market is going to get to points like this? It's quite simple. The market does not repeat itself, but human beings are creatures of habit. And because we're creatures of habit, we tend to repeat patterns. And because we can repeat patterns, if you're able to read and understand these human patterns, then you can take advantage of the market, which is what we do in the Forex market. We see patterns that we understand. Once they repeat themselves, we take advantage of it and we make money from the market. Okay? All right, so where was I? Now, on the daily time frame, I have both my key areas here. Now, as you can see, the market came here, came up here, came down here, and came up here. Now, the good part about this area was before the market broke out here, you can see that the market came up and had a nice rejection. If I draw my candles like this, and I draw this like this, what we have is like a rising wedge, okay? So the market came down, up, then broke out. Based on this, what am I expecting? For anybody who understands price action well, once you have a rising wedge like this, you should expect that the market will pull back to this area, to the area of the wedge, before continuing the drop down to the zone. Now, why am I saying this? Or what am I saying exactly? It is possible for this price to pull up to this area, okay? Then from here, come all the way down, okay? Because right now, we can see a nice rejection here, but the price has not retested this month. We are in a, currently, based on the candlestick pattern on the daily time frame, we are in a bearish market. So I would not encourage you to take this buy. All right. But if the price pulls back up to this area, which is around 1,100, and you see a nice candlestick rejection, for example, we have an inside bar set up here. Here we had a railroad train pattern here. We had a railroad train pattern here. We had an inside bar set up here. All these are rejection candlesticks. If we see a nice rejection around here, then what we look for is an opportunity to do what? Sell all the way down to this point, okay? Sell all the way down to this point. So right now, as anticipated on the weekly time frame, the price has rejected this top. It rejected it here once. It rejected it here 1, 2, 3, at least 3 times. This is what I was also saying about the 1, 2, 3 setup. There are some setups that we know that gives you a confirmation that a market is going to do a particular thing. So the market pulls up one, comes down, pulls up the second time, comes down, pulls up the third time. And after that, the market started dropping. There's something about the Trinity that I don't understand. The market will give you 3 pushes up or 3 pushes down. In this situation, whenever the market is trying to break a level, if it retested the first time, the second time, by the third time, there's a high probability that the market is not going to break that level. And that's what we can see here. Okay? So Right now, the market is midway through. Personally, I would say I'm expecting that this market would pull up. Okay. If this market pulls up and you have a nice rejection, then you can take a sell here, right? So this is the long-term setup for now. We're expecting overall that it is possible for this price to pull up to this point. But our main area of interest is to see what the market does when it gets to this demand zone. So from this demand zone, we'd like to see if one, it will break, it will bounce and go up. Now, if it bounces and goes up, we would like to know how far it's going to go. Would it stop at this supply zone or would it break it? But before we get to this point, we want to see what the market will do here. Would it bounce? One, if it doesn't bounce, would the market come through here, break it? If it breaks it, then we wait for a retest. From the retest, then we do what? Continue selling. And if we're selling, we're taking it all the way down to here, this key area of interest. So for now, on the long-term forecast for Euro USD, right now, I want to see what the market would do around here, which is 100 down to this point, 500, which is roughly about 500 pips. Aha, that reminds me. Okay. Now, aside from this point, there's also something interesting to note. If I take my trend line from this bottom and I map it all the way to the top, right? Like this. Now, people will say, why didn't you join it here? I could join it here, right? And this is what we would have. You can see that there's a nice break from this point. So it is possible that the market may pull up this way to retest this trend line and continue falling, which is the reason why for me, I'm looking at a bearish setup on Euro USD. All right. So right now I'm looking at this market and I'm saying, okay, what do you want to do? Do you want to fall from here? Because if you see this, right, you can see here that the market did what? Came down here, came here, bounced the first time, or bounced the second time, came here, did the third move before the bullish move upwards. And after it came up, what happened? The market now did what? Came down here, bounced off it. Now, here, we can say we have a proper break because we have a bearish candle and a bearish candle. The only problem with this bearish candle is this bearish candle has not broken this last low. So we can't say that the trend has changed fully yet. The market right now is here and we can see an inside bar setup. So we may see the market pull up to this point. If the market pulls up to this point, we see a nice rejection, we can take a sell, okay? But it is also possible that the market from here can push up to this area. So for now, I would say we would have to trade carefully. We want to see what the market will do around this area before we say, oh, we're sure it's doing this or doing that. Exactly. All right, so that's it for now on the Euro USD long term. I'm going to do daily analysis shortly, my weekly analysis shortly to show you likely opportunities that may present itself this week. If you want to know more or you want to follow me or follow my free signal channel, just visit us on Telegram. I'm going to post the link below and I look forward to seeing you soon. Okay, bye-bye.